Welcome back, everyone, to another episode of Profiles in Risk. I am your host, Nick Lamparelli. It's sunrise in San Francisco behind me. I'm not actually in San Francisco, but it is early in the morning, Eastern time, and I can't think of a better way to wake up than to have a conversation about something that I don't know a lot about. So I am very pleased this morning to introduce Dustin Lemick. Dustin is the founder and CEO of BriteCo. BriteCo provides a cloud-based appraisal management system for jewelers to create, track, and manage appraisals. Once appraised, BriteCo sends an insurance quote directly to the customer via text or email to get immediate coverage from AM Best rated carriers. Dustin, good morning.
Good morning. Thanks for having me, Nick.
Yeah, I'm looking forward to this conversation. I'm going to kick it right off and ask you in your words, your own words, what is BriteCo?
Yeah, so BriteCo is an insurtech company. We provide coverage for consumers and we provide technology for jewelers. And we operate in the watch and jewelry space. We are a program administrator for HDI Global. What we do is we provide a dual channel technology system. And one part of that system actually lives with jewelers. What that is it's a comprehensive appraisal management system. We've designed it to replace a very manual process that currently exists in the jewelry space for doing appraisals. You can think of it as jewelers, when they're doing an appraisal, they'll pull up a Microsoft Word template and start typing. So we essentially have built a piece of technology that will completely automate that. And we also add in some checks and balances into our system to make sure that the data that we're getting in is good and that we're getting the correct data in. And then we also have built some pricing algorithms. We even have intertwined some predictive modeling in there. And it's all based on real-time data. And so that's the piece of technology actually that lives with the jewelers. And then it kind of talks to and corresponds to another piece of technology that's more of a consumer-facing piece, which is that's more of our quoting engine, our actual application, and our binding engine. So that piece of technology, which lives with the consumer, will take can basically go from quote to bind, and that happens. We've really streamlined that as well. It can happen in, we can quote to bind in 1 to 2 minutes, pretty much. And so, yeah, that's a high level what we do.
Yeah, so you really know what you're talking about. You could even say that jewelry is in your DNA. Can you explain that?
Yeah, jewelry is in my DNA. I was a third generation jeweler. My retail jeweler. So my grandfather started our retail stores out here in Chicago in 1958. And so I kind of grew up in the jewelry business, sort of running around our stores as a little kid, probably annoying customers. But I really got a hold of it. I was born into it.
Mm-hmm.
What kind of keyed me off, though, here on the insurance side was, we did a lot of claims handling and claims processing for some of the bigger primaries, and it afforded me a glimpse kind of into that that claims process window, kind of that backside of the claims process. And so additionally, my background. So aside from growing up in the business, after I graduated from University of Wisconsin-Madison, a huge Badger fan, and I went to gemological school after college. It's just jumped right into to the jewelry business, and I worked in the jewelry business for 13 years. And 2 years ago, in 2017, is when I actually left to be the founder of BriteCo and to start this company.
Okay, so you did talk about the manual process in terms of how some of this works from the the appraisal, especially the appraisal area where you bring up a Microsoft Word template and you kind of start filling it in. I want to dig in a little bit more. Why the compelling urge to start an insurtech? That's very risky, right? You had, it was in your DNA. You probably had a good thing going. Why step on a ledge? What did you see that was underserved aside from the manual part of it that you thought, like, this whole thing needs to be fixed? Could you walk us through like the pain points for trying to get jewelry insured?
Yeah, absolutely. I mean, the first thing I would note is that, I mean, these pain points to me were screaming at me. I mean, they were so crystal clear to me. And for a while, I mean, it was something I'm like, this needs to be fixed. This needs to be fixed. And, you know, I did a lot of moonlighting and, you know, really looking at what was going on here. But, you know, to walk you through essentially what the first kind of ugly face that surfaced was on the claim side. And I feel like that happens a lot actually, is you see the pain points come through on the claim side. But then once we started looking at the entire life cycle of the policy, we started realizing, oh my God, like this whole thing is broken. On the claim side, the pain points. So really, I want to rewind it a second. The real problems start with the appraisal. And so we reimagine this whole process and we say, you know what, the whole insurance process, it kicks off with the appraisal. So if that appraisal is not good and nobody's checking it, so if I go and I submit an appraisal for a diamond ring to my insurance company, and a lot of times, a lot of these primaries, if you're scheduling something, they'll just take that appraisal at face value. They won't even check it. They don't check the data. So there could be missing data. There could be bad values on there, a whole host of different issues. And a lot of times there's a lot of lack of transparency here that consumers don't even realize. They take that piece of paper, they think it's gravy. They go to their primary, they give it to them. Nothing ever happens until a claim is filed. And that's when all of a sudden the ugly face shows. And the consumers say, oh my God, I can't replace this for how much I had it insured. Well, you're supposed to, your primary tells you you're supposed to go back every 2 years to get it reappraised. Nobody does that. So a lot of people are underinsured. Or the other,
I haven't done that. I mean, that is actually something I was going to talk about. We've had my wife's engagement ring on our policy. We got it appraised once years ago, and so I can confirm that like that now I'm recognizing, oh, that's bad on me. Like that's a huge problem.
So Nick, I can help you get it reappraised, and then you'll never have to get it reappraised again. And I'll go into that because that's something that we have something called dynamic values that actually our pricing algorithms will update that value for you, so you don't have to go in and get it reappraised every 2 years. It's nobody does it. I mean, really, nobody goes and does that. We've talked to so many people now at this point, and consumers just don't do it.
Yeah.
But a lot of times, so what happens with the current process is that that real manual process, everybody's either underinsured or overinsured. And the overinsured, the other side of the coin is basically you'll have jewelers. Now, this is changing, and with all all of the online shopping, Blue Nile, all of this other stuff, it's starting to get better, but it still exists. It used to be rampant, is that jewelers will use the appraisal as a tool to say, hey, Nick, I sold you this ring for $5,000, but guess what? It just appraised for $7,500. You got a great deal. But think about the conflicts of interest there. You have a jeweler selling you something and writing that appraisal. And if you were to make an analogy with like homeowners, for instance, I mean, that's illegal. You have to go out and get a third party appraisal from an appraisal company.
Interesting point.
I mean, it's almost in this market right now, it's almost as if, using the homeowners example again, it's almost as if the seller's agent who's selling the house also wrote that appraisal and said, oh, hey, buy this house. Here's the appraisal, and it's a great deal. So, I mean, that's sort of what's happening here. And truthfully, at the end of the day, the consumer really needs some sort of a third-party validation, third-party check to make sure that all the information going on that appraisal, is that it's capturing all the data, the correct data, that it has the quality on the center stone, that it has the weight on the center stone, or whatever it may be, and then also that's in some capacity the value is being verified, because consumers just don't know. So that's a huge problem. I mean, so those are all pain points and again, I mean, for me, it surfaced on the claim side, but once we really started looking at the whole life cycle of this thing, we started really to realize, like, because originally we're like, let's address the claims process, but now, it turned into like, we just need to get involved in the whole life cycle, and that's why we decided to become a PA.
Sure. I think that's, I don't think this is unique to jewelry, right? I think I see it on my side when it comes to property data. We get property data all the time. And I would say the vast majority of the time it's underinsured. But it becomes a problem at claims time. And, when we think about the problems, we specifically don't want any conflict at claims. So we try to reword our policy forms and try to work with the brokers in particular ways. So like you don't have that conflict when a claim actually does happen, because you're just going to lose the customer when that conflict does arise and there's that battle just trying to squeeze a few $1,000s off because there was a misunderstanding at the beginning. But I want to touch on something that I think probably maybe folks that are listening to this probably don't know, but let me phrase it and ask you a question in this way. Would you say that most homeowners that have jewelry kind of assume that the homeowner's policy, like the contents coverage, already covers the jewelry?
A lot do. There is, a very significant amount of people walk away and think they're covered with their homeowners. And
so can you explain the difference between the product offering that you have, why scheduling it or having it in that fashion is the superior way to handle jewelry versus what a homeowner's policy may or may not do?
Yeah, oh yeah, absolutely. So, I mean, what it really boils down to is a scheduled item on your homeowner's policy. It's basically an ancillary product. It's not per se tailor-made for a piece of jewelry or a watch. Our policies are specifically made to cover jewelry or watch, and we cover loss, we cover theft, we cover mysterious disappearance, which is a big thing on renters or a non-scheduled thing. I mean, damage and mysterious disappearance is typically not covered, and mysterious disappearance in this space is huge. Our policy, so some of the things, I mean, I touched on a little bit the dynamic value of constantly updating and making sure, using our pricing real-time data and our pricing analytics, making sure that you are covered for the correct amount all the time, so you don't have that problem on a claim where you have to kick in an extra few $1,000s just to get what you lost back to be made whole. We're so confident in our replacement values. We cover up to 125%. We don't have any deductibles. A big thing is we work directly with your jeweler of choice. We have a network of jewelers, not to say preferred network. We have a network of jewelers that we recommend you go to, but we don't have a preferred network. So, okay, a lot of primaries, and I had to deal with this myself when I was doing replacements. They will make the consumer, their policy holder, go to specific places that are in their preferred network, and then even worse, they'll make the vendors or the jeweler use specific diamond dealers or specific vendors for certain products. We don't do any of that. So we really streamline the claims process, and we're so big on, we think that upon a claim, that's the most important point when your policyholder really needs you. So we make sure that is buttoned up. We offer also things like preventative maintenance. So there's a whole host of things that we offer that, frankly, a scheduled policy just doesn't offer.
How does your technology, when let's say a quote gets issued and gets bound, how do you work with the consumer? Like, what are the touch points for your technology to the insurance buyer?
Yeah, that's a really good question. So I mean, a lot of what we do, the product is only offered through our partner jewelers. So we actually don't sell a policy, you can't get a policy from our website. You can't go online. So it's offered through our partner jewelers. We are very, very careful about, because obviously I don't have to tell you, everybody probably listening to this knows about the regulations here, who can sell,
Yep.
and who's licensed. And so we're very careful about that, but we provide a lot of in-store material. We do a lot of communication via chat or text message even. We have a text message option. It's not a required thing, but if you do choose to get text messages from us, you can. And we use email.
Are there like reminders to get reappraisals, or are you saying like your technology doesn't necessarily require like a consistent reappraisal? How does that part work where you're fully confident of the valuation over time?
Yeah. So, I mean, these are yearly renewal policies. So
Yep.
we, upon a renewal, we will email the customer and we'll let the customer know if there was any change. Let's just use a simple example, 1 carat diamond. Let's just say a diamond engagement ring. Let's just say that that stone went up, 1.5%. Some of these changes aren't huge. Some of them can be, depends on the item. But let's just say it went up 1.5%. Upon renewal, we'll send you an email saying your policy is set to renew. Here are all the details. Here are all the renewal details. Your stone, and then we'll actually break down for the policyholder where the changes were made. Your center stone went up 1.5%. Things like that, and that all happens upon the renewal.
Yeah. 1.5% doesn't seem like a lot, but over 5 or 10 years, it actually is a lot.
Yeah, and
That's the problem,
and it could be,
right?
and it could be more. I mean, typically diamonds have just gone up. I mean, metal markets the same way, but I mean, it could be more than 1.5, but yeah, it compounds.
Yeah. This isn't specific to insurance, but it kind of is, because you did bring up mysterious disappearance. But what are some of the biggest mistakes that jewelry owners make in the protection of their jewelry?
Yeah, I mean, in our view, I mean, the number one thing is not checking, not checking their appraisal, and it's hard. That's a really hard thing for a consumer because they don't necessarily. Buying a piece of jewelry is a more or less a blind item. There's a lot of trust that goes into this process. So even if you check your appraisal value, make sure, because a lot of times what happens is what I referred to before. Sometimes this happens is where a jeweler says, and this is an unfortunate thing. As I was a jeweler, that I hate hearing these things because we never did that, and I think it's wrong. But is issuing appraisals for a lot more than what you sold the item for, just to make somebody feel good. But the bottom line is just going to overpay for insurance. So those would be things. Yeah.
I actually have probably the first claim story I ever had was a customer of mine got a customer of the agencies. They weren't mine. They weren't my account, but insured a ring for like $20,000, and it disappeared the very next day.
Oh no!
The very next day. And so of course, red flags go up. But this was one of the big national carriers that has a reputation for just sort of paying claims. And sure enough, they paid the claim. They didn't really ask any questions. A year later, the ring turned up. So
there you go.
That was the first story with mysterious disappearance and how important that is.
That ring typically doesn't show up, by the way.
Yeah.
Usually that doesn't show up. We would pay that too. We just launched. So, I mean, we launched last week, and when we wrote our first policy, we're like, okay, no claims.
Can you talk about that? Can you talk about the feeling? That's a lot of work. I mean, I have a lot of sympathy for you because I'm going through the same thing. Now, can you talk about the path and how long it's taken? Because there are probably a lot of InsureTech wannabes listening that are like, oh, maybe I should start something. Can you talk about the pros and cons of getting something like this started and a lot of the stresses and exhilaration that you have to go through? I'm sure last week was very exhilarating for you.
Yeah, it was. It really was for me and for my team. I have an incredible team. I will say there are definitely a lot of highs and a lot of and some lows. It's up and down. Um, the most important thing I could ever say is persistency. You know, we were persistent and we just were absolutely determined, and we still are absolutely determined to get this done. But you need to be passionate about it. You need to believe in what you're doing. But in this space, the things do not move quickly, and it just, by virtue of the regulatory environment, you know, you can't. I mean, you're just not going to move that quickly. So, you know, you can try to push, and you can try to move it along as quickly as possible, and you can do that a little bit, but uh, by and large, it's going to take a while. So you just
Yep.
gotta buckle up here. I mean, um, you know, I going into it, I mean, I was aware of the regulatory environment. I just, until you go through a filing process, I mean,
Hmm.
you don't really know until you go through it. But
Yeah.
I would certainly recommend, if you're thinking about doing it, and number one thing is be passionate about it, and make sure that you're in it for, you know, you're all in. Um, you know, we had a lot of conversations with, as we were talking to primaries and reinsurance companies about what insurtech actually really is. You know, we had a lot of conversations about, there's so many insurtech companies that are coming with calling themselves insurtech companies that are really just digital brokers. You know,
Yeah.
they're the new kayak of the insurance world or
Yeah.
whatever. So, and the other thing too that I would really recommend that really worked well for us, and this was really important for us, is flush the concept out, flush the idea out. Uh, we wanted to move really fast, and we, you know, there was really some restrictions in what we were able to do in order to get a product off of the ground. And we ended up kind of doing this all pre-product, pre-revenue, and we built a rock solid business plan. And so that's where I would start to recommend for somebody if they're looking to get into this. I would say flush the concept out, have conversations, network, and put together a business plan. And we put together a 50-page business plan because ultimately, at the end of the day, that was our product at that time.
Yeah.
I mean, that's what we were selling off of.
Yeah. The concept of a minimum viable product in insurance is completely different
Oh my God, yes.
than
Yes.
a tech. Like you said, let's make a product. Let's do an MVP and get out there and get feedback. And it's like, well, the regulatory stuff and like to get to the product, to me, the magic number seems to be 2 years. It takes about 2 years to get a product
Yeah.
out.
Yeah.
So there's a lot of flushing out, right? There's a lot there you have to go through that because there's so many impediments to a startup in insurance that's very different than any other industry because of the capital requirements, regulatory requirements, access to customers. It's one of my biggest complaints of, you know, a lot of the tech folks that come in is just like, well, we're gonna port this, globalize this model that worked in tech into insurance. Like that's not gonna work. Like
Yeah.
you're gonna run out of money.
100%.
Yeah.
Absolutely. And it really poses challenges for a startup. You know, I mean, we went through a capital raise at the same time as we were going through, I mean, getting our partnerships in place, you know, with our carrier and having all those conversations. And it makes raising capital unbelievably challenging.
Hmm.
Um, so yeah, it
Yep.
definitely has its own set of challenges. And I think, I mean, for us, I mean, we just launched it. The real work is beginning now, but just getting a product to the market in insurance, insurtech is it, like you said, it can take, like, it took us probably a year and year and a half, a little more than a year and a half to do it.
Yeah. I haven't seen your business plan. I'm going to ask a question about that in the future of BriteCo. It seems like your technology is very well suited for any item that a homeowner traditionally has to schedule, which is essentially anything that's, you know, a contents coverage on a homeowner's policy. It's pretty vanilla in what it covers, and if there's anything of significant value, You generally have to schedule those and list those off separately, appraisals and all of that. Seems as though your technology would fit very well for all sorts of items, content items that generally go through that scheduling process, so to speak. Is that in your business plan? Are you like looking out in the future thinking that it's you essentially have this technology that can help with high valued single items?
Yeah, I mean, so we have a roadmap. On our roadmap, there are definitely some other lines of business that we're interested in, complementary lines. What I will say to that question is we're just right now we are complete specialists in this space, and we're laser focused in kind of conquering this market. But what you said is true, that our technology can be very applicable to some other products. So it's something we're looking at, and we have a whole bunch of things in the insurance space, and also some things that are outside of the insurance space that we can actually use our technology for. So
Yep.
To be continued.
Okay, fair enough. So I have, as I mentioned, a ring scheduled on my policy. So how does that work? I'm interested enough, Dustin, that I'm going to give this a shot. So after this particular recording, we're gonna kick the tires a little bit and see if I can't get this appraised, because I now know like this is a problem that I have that I would like to solve. It's a standalone policy, correct?
It is a standalone policy. Yep.
Okay. And so, do you have plans going forward to potentially help carriers like add this as an endorsement to theirs to help them out with the tech?
That's a great question. The answer is yes. I mean, from what we've seen, our technology is very applicable. I mean, that is something we definitely we haven't had those conversations yet because it's too early, but we would certainly be looking at that if that was an opportunity for us. Absolutely.
Yeah. So let's talk about the carrier. You mentioned HDI Global. I'm familiar with them. Great carrier. Talk about like how important it is to have an AM Best rated carrier, because you could have not done that. Why was it so important to have that, and what were the challenges in getting a carrier to sort of buy into your vision?
Yeah, it was really important to us to get a highly rated carrier, and really because the way we look at it and the way it really is that, I mean, this is our partner. If we need to make changes, that you could live or die by this. So it was very important to us for that reason, but also for credibility. I mean, for insurance, I mean, credibility is absolutely key. It's trust. They're trusting that if they're paying their premiums, that if something happens, that you're going to be there for them.
Yep.
And being a new product in the market, we just knew we needed as much credibility as we possibly could get, and the way to do that was to kind of stick to our guns. And we knew there were other options, probably much easier options, but we wanted to stay the course, and we knew early on. I had a lot of conversations with my chief insurance officer, who's a fully credentialed actuary and incredibly smart guy, Connor Redmond. And he, when it, on this side of things, really with the filing and all that, he drove it. And not to get too far off topic, but he, we were told, and we had conversations with, that it was going to take us 9 to 12 months to get our filings through. He pushed them through in pretty much 4 months. And that to us is a huge accomplishment. But going back to the carrier, we just thought it was a really important thing, and it was just such an important partnership for us that we needed to really talk to the best. And so that's what we did.
You bring up a very important point, something that Wesley Todd and myself talk about a lot. For the tech companies that are coming into the space, is having insurance wisdom, insight in the company. You just brought up a very good point, right? Like you had an insurance professional with you that streamlined a process, basically cut it by like 2/3 of the normal time. Can you talk about how important it is for startups that are more tech oriented to have someone on staff that actually knows the space?
I'm really glad that you asked this question because it's really important. I mean, you can spend a huge amount of resources and capital, and some companies try to go this route with going with the consulting route and hiring a consulting firm to come in and help you with your filings. For me, not I came from a jewelry background. I mean, I had some experience in the insurance side, more on the claim side, but certainly not on the filing side. I One of the first things that I did was, I really did a lot of networking, talking to a lot of folks in insurance, to try to understand, what this thing's going to take. And when Connor's one of our co-founders, and he, we mapped it out, and it was so important, so very important. So I couldn't imagine it would have been so much harder to do this. It's doable. Like I mentioned, I mean, you could go out there and spend hundreds of thousands of dollars or more to hire a PiR Knight or somebody like that to come help you. But for us, I mean, having an actuary on staff, I mean, incredibly important for us.
Yeah. I agree. This is the part of the podcast where I transition over to more personal questions to give the audience a flavor of who you are. But it's also because I'm lazy, so I like to piggyback off of your answers. So we're all busy. So I'd like to, you're in the middle of a startup. So what tools or technologies have you found to be useful to keep you productive and or organized?
Oh, this is easy. Slack, and more Slack.
Slack, very common these days.
I mean, we use it especially for dev projects. There's a lot of things happening very quickly while you're building technology, and sometimes your developers need answers immediately. They're in the middle of coding right there, they're in a rhythm, and they're like, we need an answer to this question. And via Slack, it's just the quickest, fastest way to do it, but also to manage everything. It's just a great management tool.
Yeah, especially if you're remote, which is our situation.
Yeah.
We can Slack each other and then say, okay, let's screen share. And in Slack, you can dial, and then start sharing screens and stuff. It's becoming more and more valuable to us, so much so that we're even considering it, like embedding it into our policy management system. Like for us to be able to move policies from submission to quote to decline or acceptance to bound, like really embedding it. It's an amazing technology. I agree with you. I think if we had to go back to just like pure email, it would be pretty clumsy.
Yeah. I like that. I like what you guys are thinking of doing. And a little known, you probably don't know this, I'm actually in your Slack channel. Little shout out for you there.
Insurance nerds. Okay. I'm
in the channel.
I'm going to highlight you and make sure everyone reaches out and says hello. That's how they can reach you. Awesome. Thank you for that.
Yeah.
Dustin, what books have been influential in your business and or personal lives?
The book, right? I mean, the top of mind for me right now, going through what I'm going through, that I'm reading for the second time now, actually, is called Blitzscaling by Reid Hoffman. Reid Hoffman is an unbelievably smart guy, but he talks about scaling businesses. Some of it is very applicable to insurtech. Some of it is not, because by nature, like scaling very fast is tough, as we talked about. But it gives us a lot of tips for, and it's really interesting. It talks about network effects and other things. And he also has a podcast for Masters of Scale that's excellent too. But I would say Blitzscaling.
I'll put those on the show notes for anyone that's listening. Reid Hoffman, I think he's the founder of LinkedIn, right?
Yeah, he's the founder of LinkedIn.
Yeah, big time entrepreneur. So I'll put those in the show notes. And I learned more about the jewelry business in jewelry and scheduling insurance in this hour than I probably knew beforehand. So this is pretty interesting, and I think post-call we're going to kick the tires a little bit. So I'll let everyone know how that goes. But Dustin, this is fantastic. Congratulations on the success. Congratulations on attacking an industry that had a lot of pain points and being an outsider coming in and saying we're gonna fix this. So there's a lot to salute here, and I wish you nothing but the best.
Thank you so much. Thanks for having me on. This has been fun.
Yep. So my guest this week has been Dustin Lemick. He is the CEO of BriteCo. Go to the show notes, give us a plug, and you can connect with Dustin and all the other podcasts at insnerds.com. Thanks again, Dustin.
Thank you.